Welcome to the AJ Brown Show, where we talk about all things investing, options trading, and the like. Now, here's your host, AJ, whose primary mission in life is to help you become a better investor.
All right, ladies and gentlemen, welcome back to episode 175 of the AJ Brown Show. We are so blessed today to have AJ joining us because of his slight mishap this week.
I
Looks
had
like
a boo-boo on I had a boo-boo.
the markets are trying to keep AJ down, but he's a fighter. We're a fighter. We're fighting back. Today is March 14th.
Right.
AJ, I looked at the markets this morning, and today might be the first positive sentiment day in a while, right? Like, even if it's a rebound, but it feels like everyone who's scared is left. What are your thoughts?
I don't know about that. I think that we're seeing maybe a little bit of bargain buying. The news is that the Democrats are not going to let the federal government shut down. So, the market's positive about that. But that is a transient piece of news. So I think people are taking an opportunity to do some bargain buying, but I'm not sure if this is actually the bottom. Uh,
Yeah, and the way that we could maybe dig into that is 2 episodes ago we had Hema on and we were
yeah,
looking at the S&P and we were like, hey, 5,800. If we get down to 5,800 and we break, that's when I'm
that's
going
a
to start to
problem.
worry.
Yeah,
We're at 5,600. Let's go ahead and pull up your charts. And
yeah.
what are your thoughts on this extension to the downside?
Well, so everybody's asking me, should I be joining on the selling bandwagon? And my answer to that right now is not yet. And the reason is because you know, this is not what we call a mature downtrend where we want to change all of our strategies and start selling. A mature downtrend would have a retracement. Maybe today is the beginning of that retracement, right? Where we come about halfway and then start selling off again. If that happens, then I'm all for it, right? We're going to do downward swing trades. We're going to do trend trades in the down direction. But everybody's asking me, should I be shorting the market? Should I be selling everything? The answer is right now we're taking defensive positions, right? We're getting into cash or we're collaring all of our positions. We're relying a lot on our VIX hedge trade, but this is what we call the bear climbing or a bear jumping out the window, right? The bull climbs up the stairs, the bear jumps out the window. The problem with bears jumping out the window is that you can hit the floor unexpectedly. And if people are just then starting to starting to buy, substitute put options, they'll automatically be out of the money and lose some dollars. So we are not jumping on the selling bandwagon sip, we're simply jumping on the defensive bandwagon right now. We're waiting to see if this downtrend matures, then we'll jump on the selling bandwagon.
Yeah, I saw a couple tweets that were like 9 months of gains erased in like 10 days or some sort of comparison like that. And that's a good way to look at the bull climbing the stairs and the bear jumping
They're
out the
jumping out
window,
the window.
and probably always being able to protect yourself when that happens, right? Like,
Yeah.
because a lot of our viewers and members that come to us are new to options. I think that's one of the big takeaways of your strategies and what you're doing is, hey, when this bear is jumping out the window in 10 days, we've got the tools and the strategies. And you mentioned it with the collar, you mentioned
Yeah.
it with the VIX trade.
Yeah.
You were messaging me this week that the VIX trade was killing it.
Killing it. We're going
What
to go into the anatomy of that VIX trade soon, but let's take a look at the VIX just to get an idea of what's happening in the overall market. I mean, that's kind of insane with the VIX. It's coming down off of its highs of Monday and Tuesday. But man, when it gets above that 26 threshold that I have drawn, what that means is that the fears in my mind are unfounded, right? We all have fears, but they turn out to be nothing. When it starts to get above $26, it means that the fears actually have some basis to them, that there's actually something going wrong. So, we're on that precipice of, are we doing what's right, in the macro economy, or are we on the verge of doing something wrong, at least in the short duration? So we're down off that. We're trading today around 22.55, 22 and a half. But, we're playing up there at that nasty range.
Would you agree that there's not a definitive driver to this selling? It's a majority or a multitude of factors. Essentially, every day there's a swing on the tariffs. We're still getting some economic news. Are people paying attention to earnings anymore?
You know, what's happening during earnings is, right when we announce our earnings, we're talking about what's happened in the past quarter, and then we give forward forecast, and the market is really responding to the forward forecast, and the forward forecast is actually referring back to the tariff war. So with the market, in the general economy, I think there's a lot of factors, but I think what's happening in this particular, with the equities market, it's all about the uncertainty around tariffs, right? Or uncertainty in general, but mostly the uncertainty around the tariff war that's going on. We've had this economy for over 125 years that has been based not on tariffs, right? And so, the current administration, with their fiscal policy trying to switch us back to something from 125 years ago, they're taking a very big gamble without really knowing what's going to happen. The market doesn't like that. And the fact that it's on again, off again, that's also driving the market crazy, because the market would like to know where the goalposts are so that they can do some planning. Right now, all the forecasting that I'm hearing from during these earnings announcements is, we don't know what's going to happen, so we're not going to invest in our business. We're not going to invest in stock buybacks. We're not going to do anything that would make it worthwhile for you to invest in our company. And that's across the board. And that's why you're seeing investors leaving the equities market and going, interestingly enough, going to gold, right? The US, and again, this particular administration, when I say the US, I mean this particular administration has decided to go crypto. All in all, right? They're talking about making a sovereign fund and buying a certain amount of Bitcoin to have, just like we have a certain amount of gold in Fort Knox, blah, blah, blah. Um, I think what you're seeing from investors is kind of a referendum, basically saying, anything that this particular administration is pro, right now we're going to be con, right? Pro tariffs, con tariffs. Pro Bitcoin, you saw it, Bitcoin is down 20%, right? They're trading at 80 when just a couple weeks ago they were trading at 100, 105. So gold is at all-time highs. We're actually, I've been talking to people about not only how to buy the gold ETF or how to buy gold futures, but I'm talking about like buying gold bars and burying them under my house. I'm to that point, just to make sure I've got that hedge in my portfolio.
Yeah, there's actually a cool company called Glint, if you've ever heard of it, that is kind of like a debit card that's tied to physical gold. Uh,
We need to get them on our podcast.
yeah, that wouldn't be a bad idea. But they've been in the game for a while, and when gold was tanking, they would struggle. But now gold is at all-time highs, so a lot of
Yeah.
these gold and silver companies are doing very well. Um, Looking, and we'll dig into this VIX trade because
Yeah.
it's unique and it's great for when
Yes.
like when markets, when you hear the pundits and the news heads say, "Oh, the market's crashing," blah 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 blah. Yes, it is, but that's also good opportunity for those educated and wise investors and members of the community, because you put that trade on pretty early in that pullback. So, but before we dig into that, I did want to, and it looks like you're pulling up some of the
Oh,
economic news.
I always have that trade on. I always have that trade on, Sip.
So even if it doesn't go your way, it's like a break even.
Exactly. And we'll talk about that. But that is a trade that I put, and it's just like buying gold. That's a trade that I put a good 10 to 15, even 20% of my portfolio in, and I just roll it out and keep that trade all the time. We'll talk about that. But I wanted to bring up the economic calendar. I mean, I'm not even sure why I brought it up because, yeah, basically all it's saying, every report, whether it's earnings from an individual company or it's this kind of consumer price index, producers price index. It's just basically saying that everything is slowing, coming to a standstill. One thing that I thought was interesting was, how we always follow the quantitative tightening of the Federal Reserve? Well, the Federal Reserve at some point will probably have to put on its brakes. I know that, when the economy was at all-time highs, there was continued investment. They were hoping to get this number at least to 5 trillion or lower. They're at 6.75, 6.75 of a trillion dollars. They talked about it. We saw in their meeting minutes from the last Federal Reserve meeting that they may have to stop quantitative tightening for now because quantitative tightening is a drag on the economy. And when the economy's at all time highs and inflation, that's not a problem. A drag is a good thing. But, if you tank the economy in 6 weeks, which our current administration seems to have done, you probably don't want to be quantitative tightening. So I would expect at this upcoming meeting, um, for the Federal Reserve, that they're probably going to decide to stop quantitative tightening. And then we know that they're probably, we were talking about moving the next rate drop. They're going to have to play defense here. They're going to have to adjust monetary policy around what's happening with our fiscal policy. So, June 18th all of a sudden becomes the most likely date for the next rate drop. But May 7th is not off the May 7th is not off the calendar either.
Even though they don't want to, right? The Fed's always like he's always out there like, "Oh, I don't care what the president says, and we're gonna dictate our
Yeah.
policy by, our own metrics." It's like, yeah, okay.
Yeah, except for, if all of a sudden, like I said, 6 weeks ago, we were at all-time highs, wondering if we were going to go higher. Now we're actually in correction territory on all three of the big three indexes, meaning, it's not impossible that we're in a recession. Going from this would be the fastest we've ever gone from all-time highs to recession. So we'll see.
Yeah, and it's funny how President Trump is always saying, "Oh, it's gonna be a little bit pain. We gotta get through the pain. It's gonna be pain."
I mean,
It's
it's a
already
big
started.
gamble. I'm saying it's gonna be a very big gamble, and I think that a lot of folks are just staying out of his way, but you gotta watch out because if you make that gamble and it doesn't work and all the folks basically stay out of the way, you'll see how quick people turn on you, right? We'll
Yeah.
see.
Well,
Maybe the gamble will pan out. I mean, nobody's used tariffs this way, literally in a century and a half or a century and a quarter. So we'll see if tariffs have the same, ability to do what they do in the 21st century that they had in the 19th century.
yeah, and it's kind of wild to think about because we have shipped so much manufacturing out of the country, and now the benefit of manufacturing in the although that's going to take some time to catch up
4 years, dude, at
at
least to get
building
factories open.
a plant to build iPhone. But the I guess the optimistic part of it is, we are kind of on the forefront of this technological, like another technological revolution with all these
Yeah,
AI tools and bots and
yeah,
self-driving cars and self-driving delivery. Like maybe that's that next wave of we manufacture here, but we use some of these tools and it's not
absolutely.
as, yeah. So, and you're right, that's going to take a while. So we'll keep an eye on it. But fortunately for us in the trading trainer community, If markets go up, we've got opportunities. If markets go down, we've got opportunities. If markets sit in those little channels and don't move, we've got
We got
opportunities.
opportunities.
We've got strategies, and that's why we have the show every week. So we're going to take a quick break because I know people are excited to hear about this VIX trade, how to
Yep.
implement the VIX trade into their own portfolio. So sit tight, folks. We're going to take a short break. We'll be back. As always, we're streaming live. We've got AJ's pick of the week. We've got some speed round names. And if there's anything that you want us to cover or you have a question for AJ, feel free to throw it in the chat. Sit tight. We'll be back in a jiffy.
In a jiffy.
I get it. You're afraid of trading in the markets. Guess what? I've got your answer. I've got 4 strategies I'm going to give you along with the tools to make it super easy. I'm going right home, giving you the webinar. I need you to sign up below and meet me in a few minutes.
So as I'm sitting here thinking about the VIX trade that we're going to go over, I was just asking myself in my head, if I asked my friends, 10 of my friends, if they know what the VIX is, I'm pretty sure all 10 of them would have no idea what it is.
Yeah. Yeah, no, people are not, it doesn't register. So implied volatility is really the name of the game with VIX. And if you ask again what your friends think of implied volatility, they might not be able to answer you that way. What the VIX is, well, let's just talk about, options. So options, we can use them. In fact, the hedge funds, the mutual funds, the pension funds, the way they typically use options is to hedge, right? Because you can buy protective puts or protective calls depending on whether you've gone long or you've gone short. And so you don't necessarily have to liquidate your position to cash in order to protect yourself. You could use one of these insurance policies, these options. And of course, options are also traded, right? And there's a supply and demand for them. So if all of a sudden these, big money folks start buying a lot of options, that makes their price go up. It's like if you start buying, if there's all of a sudden a run on hurricane insurance where you live, then when you go to get a hurricane insurance policy, it's going to be more expensive than it was when nobody was looking for it, right? There's supply and demand, and there is for these options as well. Well, we can mathematically, extract some of the variables or influences to an options price out of the option. And what we're left with is that demand or supply of the option based on, whether people are wanting it or not wanting it. In other words, you can almost measure the demand for this insurance policy, and that's called implied volatility. So the higher the implied volatility, the more people are fearful and confused and uh, upset, they're uncertain. And if the implied volatility goes down, well, then people are more confident. They're not needing those insurance policies. They feel like things are going the way they're supposed to be going, and they don't need to insure themselves, right? They feel fat, dumb, and happy. And so the VIX is actually kind of a amalgamation. I don't know if that's the right word. It's a combination of all that fear and confidence measurements over the S&P 500 stocks, right? And so it gives us a good understanding of whether the markets are, fearful. The higher it goes, the more fearful it is. The lower it goes, the more confident we are. And here I'm going to show you guys, because we have from the beginning of the VIX, which was around 1985, right? So what you can see here is the VIX very rarely goes lower than $12, right? And that's kind of a psychology experiment. What that means is we never, as investors, or should I even dare to say human beings, we never get so confident. We always have a little bit of fear or doubt in our mind. That might be, leftover reptilian brain, like where's our next meal coming from or something like that. But we only get so confident. But now you'll notice these various spikes. This was the last time, by the way, there was a major fiscal change. This was 1987 during the end of the Reagan administration when they decided to rejigger the whole income tax, right? And that's very similar to what's happening now. It's not that we're rejiggering the income tax and what you can deduct and what you can't deduct. We're basically saying we might be switching from an income tax society to a tariff-based society. So that you're saying, but this was, this people went off the rails. There was something called Black Friday back in 1987. Then you kind of go forward. This was the first um, war in the wall falling down, the first war in Iraq. And then you've got the dot-com boom and bust. You've got September 11th. You've got, the whole Afghanistan war. Then it got really calm for a while. Then we had the Great Recession, right? And then, there's been some times during that, whole time where fear kind of, and what this is showing is, we said we only get so confident, but when we get scared, out of our pants, we really do. We buy insurance. We we get scared and we take action, whereas we never get so cool that we ever drop all of our insurance policies. We always insure ourselves, right? It's kind of our risk averse nature. Here's COVID right here, the beginning of COVID, and then what's happening right now. We're starting to peak up again. Let me zoom back in because we can use some of these psychologies that we're talking about. Let me actually zoom out to about 6 months instead of 3 months. So what what our whole VIX trade is here is that we place two vertical spreads, right? One vertical spread is at the bottom. Here, I can show you here. Analyze. Okay. So we place one vertical spread at the bottom, and it's a credit spread, which means we actually get money from it. And then we hope it expires worthless because then we get to keep that money that we got from it up front. So we do a vertical credit spread, and then with that money, we buy a vertical debit spread. And like I said, I always have this trade in place, right? Because the idea is we never get that confident. So we never actually believe that we'll fall off this left-hand side of the two vertical spreads because we always have a base level of insurance to our name. And then you've got this here. This is where we expect this trade to be all the time, right? This is that normal zone between, like, in this case, I have it between 16 and $20. Between 16 and $20, if the VIX stays in that range, well, then the trade's basically going to be, like you said, a break even trade. And at the end of its expiration, I'm going to come out with a little bit, nothing gained, nothing earned, but I had some protection. But remember we talked about how the fear goes off the rails? Well, when the fear, and indubitably it does, when the fear goes off the rails, and a lot of the trades in our other portfolio, in the rest of our portfolio might come under some duress, this is when this trade shines, right? All of a sudden, this trade ends up on the top of this plateau and we wind up cashing out. So that's why we call this the ultimate VIX hedge. So you'll notice I got the credit spread, and in this case, I got the credit spread for 31 cents. Now, that's the amount money they give me, right? When I do the credit spread. Remember, when you do a credit spread, you don't get that 31 cents for free. Because if you were to fall off this cliff to the left-hand side, and there's always a possibility, even though we know people always keep a base level of their insurance, there's always a possibility people could get confident, right? So if we were to fall off this side, our broker would come to us and want us to give not only that 31 cents back, but because this is a dollar spread, they'll want us to give the remainder of that dollar out of our pocket. So what our broker does is our broker takes 69 cents. That's the difference between 31 and a dollar. And they kind of lock it up. It's called the margin requirement. So if you think about it, they give me this 31 cents, right, of cash, but they kind of put that 31 cents and that 69 cents on kind of a hold. They make sure that we've got that amount in our portfolio so that either we close the trade or March 18 rolls around, and they make sure that we're not going to ever need that the trade didn't fall off the back end. But so if you think about it, this trade actually cost me virtually 69 cents to do. But okay, so it cost us 69 cents. We took a few pennies, we took a little bit of that 31 cents and we bought the 14-cent debit spread. What's nice is if the trade is on this upper half, we get the other half of that 14 cents. So we get, in this case, 86 cents. We get to keep the 31 cents and we get 86 cents. Now, that's almost a 200% ROI if you think of the initial 69 cents I have off the shelf. So if it just wound up staying in the middle zone, well, then I'd get to keep, what's the difference between 31 and 14? Something like 16, 17 cents. I keep 17 cents a share. So like I said, break even, a slight credit, enough to cover commissions for all these trades. But if I jump up here, well, now we're talking about 86 cents plus 31 cents per share. So 86, 87 plus 30, 97, $1.07, $1.17. So you're getting $1.17 a share when you jump up here. I mean, now that's a payoff, seeing as how over here it was going to be something like 17 cents, right? 17 cents versus $1.17. I mean, come on, that's awesome.
Yeah, and so I have a few newbie questions on this.
Please.
What's the minimum I need in my account to put on a VIX, protective trade?
Well, so like I said, your broker's going to come at you for that 69 cents and make sure it's in your account. So if you remember, everything in options is lots of 100. So 69 cents is $69. So to put this trade on, you would need to have $69 for every contract you had. That's it.
And so usually those are sets of 100. So with 1,000, so if I had $1,000, I could put this on. And had I followed your,
if you had if you had $69, you could put this on.
Okay, yeah, fair. But the lots of 100, right?
No, 100 on 69 cents is $69. You really only need to have $69 in your brokerage account to put one of these on.
Okay. So then you're talking about tripling that because of the bear jumping out the window, and the way that you bracketed it, it's expiring on the 18th, but you could get out of that position at a profit, right?
Well, I already got out of it. So I got out of it on Monday, or on Tuesday. Monday, I was talking about it with my Money Link. So folks, you really want to jump into our program. You want to learn how to do this down to the nth detail. I can't give it the amount of time that it deserves to really get it so that you get it down during our podcast here in 15 minutes. But I'm going to tell you that I use my same indicator, SIP. I use my Fast MACD. Now, I don't remember how we told people about the Fast MACD, and we talked about how VWAP. The VIX doesn't have VWAP, so you have to revert back to using the close price that you're seeing that I got up here. But I just use my VIX arrows, and every time I find a bottom in the VIX, I place this trade, right? So I found the bottom of the VIX back on the 21st of February, and then I found the top on the VIX. And so when I found the top on the VIX, that was when it was time to get out of this trade, right? So, it was already at its full value on Monday, Tuesday, Wednesday of this week. It was already, we only had less than, 7 more trading days, and it was so far above that $21 threshold that I was able to get almost the full value out of the high end of this trade. So I just went ahead and take the money. Next time I get a blue arrow, I'm going to do this trade all over again. And every time I get a blue arrow, I do this trade, right? Every time you find a bottom, you do this trade. It's just something as a best practice to keep, a good 10. I keep actually 15, 20% of my portfolio in this trade, rolling it out blue arrow to blue arrow, right?
Yeah, and just real quick, when you put it on, what's your time estimate of, because it looks like it's like a 2-week position. Is that what you're looking for in the swings?
Absolutely. 2 to 3 weeks is how far you go out to expiration. Now, usually I'm a 2-week, I use the weekly options to do this. Usually it's I'll put it out for 2 weeks. I went farther this time. I went for the whole monthly option. One, because liquidity, right? The monthly options have a little bit more liquidity, and I decided to, instead of putting my usual 15%, 20%. Why? Because 3 weeks ago, you and I were kind of talking about, hey, we're in this new administration and they're already talking about crazy stuff, and Elon Musk is doing some crazy stuff. And I said, you know what? I'm going to put more into my hedge trade than I usually do. And I went farther out because it just made sense, right? The writing was on the wall. Everybody was no longer talking about how well they were doing. They were talking about how they were preparing for the craziness that was on the horizon. So I said, if everybody's doing that, I'm going to do that as well. So usually I go out 2 weeks. This time I went out 4 weeks. I'm glad I did. I was able to liquidate it a week early, so I wound up staying in it only 3 weeks. I got, I think a few pennies under the max value, which is fine. But yeah, that's how you roll this trade. You just keep it in place. Keep it in place because, it worked for us back in December too. Back in December, we cashed out of it too. Every time the VIX goes above your upper threshold, I mean, that means that all of a sudden your trade went from, break even to max value, which usually is around 100% ROI.
Yeah, and I imagine this VIX will stay elevated for some time, even though we may see some improvements just because of the different factors, whether it's Ukraine, whether it's Israel, whether it's Canada and Mexico,
Oh my
just kind of
gosh.
beefing with everybody. So maybe over time it'll settle down. But that's AJ's VIX trade. If you're looking for opportunities with 200 to 300% ROI, this is something to definitely learn and implement into your portfolio. So we do have a couple other VIX examples on the YouTube channel. So if you just head on over to the YouTube channel and search VIX, we should have some videos. So that's AJ's, I guess, last week's pick of the week or before the
Well,
last 2 weeks ago.
it's the anatomy of the VIX trade. People have been just mailing in. They've been like, "Hey AJ, are you still doing your VIX trades?" Yes, I'm always doing the VIX hedge. I've always got it in the background. And I can't even take credit for this. I have to give credit to this. Many years ago, my one of my lead coaches, Coach Neil, brought this to my attention. He's like, "Do you trade the VIX?" And I was like, this was maybe, 2016, 2017. I'm like, "Tell me about it." And he went through this trade and it just became a no-brainer. And this was around when Trump got first elected, and I started to put this on, and every time during his first administration there was some sort of like craziness that affected the market, I cashed out. Now, combine this with the collaring that we're doing on our premium selling positions, which basically protect those. And, I think a lot of people use this VIX trade because the rest of their portfolio goes down. So when the rest of their portfolio goes down, this VIX trade, hedges it. For us, the collars protect the rest of our portfolio. Whatever profits we've already accumulated, our collars protect it. So this fixed trade becomes frosting on the cake. I mean, I wouldn't be surprised at the end of 2025 if I look at my overall trades for the year for tax purposes, if I find out that the VIX trades was the predominant moneymaker, because I foresee 2025 is going to be one of those years.
Yeah, and it's almost like if you ever are worried about losing money in your 401k or IRA or portfolio or stuff like that, then have this on to offset it, because there will be more pullbacks. It's just inevitable. This is the nature of the market. So AJ's VIX trade hot topic of the week in the trading trainer community. But we've got some more hot topics, AJ, that people want to know.
Yep.
That we'll run through in our speed round. But before we do that, there is a name that you're looking at this week that we should, and gladly we'll let the people know. This week, you're taking a glance at a company I don't know, so I'm going to Google it.
Coupang.
It's called Coupang, ticker symbol CPNG.
Guys, those of you watching this show, if you're not part of our program, and I hate to do a shameless plug, but this candidate came from the groupthink, the hive mind of our program. So if you are wondering, you're like, oh my gosh, how do you trade all of this? Well, remember, our whole program is based on using options as they decay in time. So all of this tumultuousness in the market isn't really phasing us because time still reliably goes by. Our option extrinsic value still goes to zero, right? That's why they call options wasting asset. And we put ourselves on the selling side. So, if you want a reliable, consistent way to profit from all this chaos in the markets, premium selling where it's at, and join our hive mind, and you'll be able to leverage. I'm bringing this one. This was brought up to us yesterday during our, premium selling workshop that we do with our program participants. And Coupang, this is basically the Uber Eats of Korea. But they do a lot more. They'll bring you, if you order like some fashion from one of the big name department stores in Korea, they'll bring you your order from the fashion place. They'll bring you restaurant food. They'll bring you groceries. So this is an overall, I guess you would call it a delivery service for Korea. But let's pull up their chart, because I really was loving their sideways choppy market, and they're just about ready to form a bottom. Now, here I'm going to go back. Coupang is one of those companies that we can use volume weighted average price on. So I'm going to use my fast MACD indicator and switch it back to volume weighted average price. I like that a little bit better for my signals. So I'm waiting for my light blue arrow here. I haven't gotten it yet. But when I get that light blue arrow, buying Coupang, that's, going long the CPNG, or there's a substitute option you can buy if you don't want to buy the actual stock itself. You could buy the Coupang January 2026 $12.50 call. Here, let me see if I've got that up. No, that's the VIX. Let's take a look at Coupang. That's CPNG. And remember, if you want to use our options lookup tool, that's free too. Our indicators are free too. You can just go get access to our web portal, and all of it is in there. So I went with all the strike prices and the price components. It makes it super easy to find substitute options. I've gone out to January. I'm looking for around, and by the way, I want to make sure I'm looking at today's or our most recent data. So let me just recalibrate. There we go. You go and you look at this percentage right here, and you want it around 5%, but you also want to find where the bid-ask spread is small. So this is why we picked this particular option right here, the Coupang January leap. So the leaps are the January 2026 1250 call. This is a perfect substitute. It'll move in lockstep, but it's half the price, right? This is $10.48. Coupang is currently trading at about $22.18. So for half the price, you get twice the leverage. So either one of those, buy the stock or buy the substitute option, and then you're ready to go, right? As Coupang moves up in price, you'll either let it go and have it be a money. And I love that this stock has nothing to do with the U.S. market. It's all about the Korea local market, which is probably going to be a little bit more stable, based on you know no craziness going on. So I love that. I like the ones that aren't in the news. I like the ones that just operate. They have a good business in place. They're building up, brand. They're building up names. So as it goes up, if it hits a top and it looks like it might, there's some resistance up here around 25.50, 26. When it gives me that magenta arrow, I'll collar it and it'll start becoming one of those income generators for me. So Coupang, put that on your watch list. Paper traded
Yeah.
if you're not sure.
I was just trying to find like info on Google and it's all in Korean and I have no idea what it says.
Yeah.
But
They're
the
it seems
delivery,
like they're gonna be a good company.
yeah, well, the automated delivery and integrations with that, at least in my neighborhood, I'm seeing that firsthand. Even with an economic slowdown, I still see people walking out and getting their food from these delivery services, and I'm like, man, that is just never going to go away. And when there's these technologies that make lives easier,
Didn't you say
Coupang,
you had drones going up and down your sidewalks? Or robots?
lunchbox on wheels.
Lunchbox on wheels. That is cool. And do they do well when you're flooding?
Not sure about the answer to that, but I will see like 4 or 5 of them rolling on a street and
Wow.
people just walking and seeing this lunchbox coming towards them and just stepping aside. So it's like, okay, like people are accepting this automation into their everyday lives. And,
That is so
I
cool.
think that that's good long-term opportunity. So it sounds like Coupang is one of those names doing it in South Korea.
South
All right.
Korea. You get it.
That's AJ's pick of the week. We got a couple names in the speed round. Let's go ahead and start with Chris in Bozeman, Montana. How's apparel doing, AJ? Nike, ticker symbol NKE.
You know what? Nike's coming up to an earnings call, and I'm sure they're going to say the same thing that all the companies have been saying. Supply chain woes. Where do they get their? A lot of the Nike factories are in the Far East. Are we going to be tariffs? So there's going to be talk about tariffs. I would almost say to you, Chris, I know that you have written into us about Nike before. This is one of your favorite ones. Did you short it this last time around, or did you go long over here? I'm not sure. I'm sure you're in this trade. So let's talk about the different scenarios. If you've got a long position now, you've sold your premium, you've bought your protection, and now you're waiting for your expiration, right? If you sold your premium and bought your protection, then your premium looks like it's going to cash out for you. It's not going to get you called out. Instead, you're going to get to keep that premium money and you're going to get to do it again and again. What you're concerned about is your protective call. I would leave your protective call, even if you get your light blue arrow. I would leave your protective call in place through earnings, because that's going to protect you just in case earnings makes Nike go lower, right? That protective call will kick in. And even if you have a stop loss order on the stock or the substitute call option, even if that thing gets stopped out, leave your protective call put in place until whatever, happens during earnings. Once you found a bottom and you're after earnings, get rid of that protective put. Now, if you're in the other condition, if you're shorted, here's what I would do. I would wait until the earnings, and then, because if the earnings are what I expect them to be, you're going to be glad you're shorted, because if it goes down any further, then you just look for the bottom and you laugh all the way to the bank. You're in one of those positions where even though Nike's not doing well, you're on the correct side of the equation. So don't collar your position until after earnings, and then only collar it once you found the bottom. And last but not least, if you're thinking about adding positions to this, if you're thinking of, am I ready to go long? Again, wait for earnings, see how low it goes, and then don't buy stock until you found a bottom after that earnings date. So a lot of this has to earnings. And would I do an earnings trade on this? Traditionally, I might have, but I think let's hold off on doing any sort of earnings trade on this. Let's just let it get through earnings. Make sure if you're long, you've got your protective put in place. If you're short, let it go wild and don't add any more position until we know what happens on earnings.
Yeah, I could imagine them having some pretty strong statements in regards to importing
Yep.
factories, things like that. So probably more of a sidelined play. So thank you for that, Chris. Moving on to our second name, something that I think is more close to home. This is Tanya from Chicago, Illinois, interested in Honeywell, ticker symbol HON.
Honeywell is so diversified everywhere from aerospace and defense into consumer retails. If you look at, the thermostat on your wall, if it's not a Nest or an Ecobee, it's probably a Honeywell. So yeah, this is one of those companies where I think it wouldn't be a bad idea to kind of, put some money here. This isn't, again, a popular stock. It's not one that's in the news. It's not going up or down 10% or losing half of its value or however much Tesla has lost so far. This is Honeywell. I mean, look at their earnings, look at their dividend. In fact, you know, I wouldn't be amiss to tell you if you've got the money to buy stock, right? You put yourself in place to get, that big dividend. Now, Honeywell's at a really high price. So you might not be, unless you've got the bigger portfolio and you can afford, lots of 100. We're talking about, 20,500, $21,500 for every 100 shares of this stock in order to get in at a bottom. I would wait until you have a bottom. We haven't really gotten a good sign. If you bought some back on February 19, great. You could probably do some dollar cost averaging if you get another opportunity. But I'm waiting for my next light blue arrow and then, adding some Honeywell to my portfolio as, kind of a baseline portfolio hold. There's probably a substitute option. The other thing you could think about is doing a vertical spread. So once you find a bottom, doing a vertical spread. For your vertical spreads, make sure you understand this is different than the VIX, where we know that people don't get so confident. We're not sure if Honeywell might have something and drop all the way down. So with your vertical spread, only buy as many vertical spreads as you're willing to lose, because vertical spreads could go from something to nothing in the blink of an eye. So make sure a lot of people extend themselves into vertical spreads. Don't buy any more vertical spreads than you can afford to lose. But I think that Honeywell is a good buy. I would wait for the bottom, and then however you do it, do it responsibly.
Yeah, and it seems like Tanya thinks the same. So thank you for that. Moving on to our third and final name in the speed round, Kyle from Houston, Texas, wants to know what's the scoop with CSX Corp, ticker symbol CSX.
This is a railroad, okay? And I see what I think you're seeing. So CSX is a well-run freight railroad. It's one of my favorite candidates for selling premium against. And I see that you think perhaps that CSX is at a bottom and that you should maybe, when you get your up arrow, your light blue arrow, you might think about buying some CSX. Here's where I'm going to let some outside information play in. Tariffs are going to affect freight big time, right? You think about it. The CSX, one of their biggest businesses is going from the ports inland to the factories, right? And if we're not going to be having as much coming through the ports, if we're going to put tariffs on all of Europe, all on Mexico, all on Canada, our biggest trading partners, China, of course, has a bunch of tariffs on it. I don't know if we're actually seeing a bottom, and I would be worried to tell you, let's go ahead and wait for a blue arrow with follow through, because there could be some bargain buying that gets our signals off kilter. I'm going to be personally staying away from CSX until the tariff master says that he's done playing around with changing rates and the uncertainty, and we know where those goalposts are with respect to tariffs, and then we can reevaluate CSX as a possible premium selling. I don't think CSX is going to hit a bottom, even though it looks like it's bottoming. So be careful buying into CSX right now.
All right. Sometimes we like them, sometimes we don't. That's why we do the speed round. If you're looking at CSX, maybe head on over and check out Copang, because we like that one better. But thank you for that, Kyle. And thank you, AJ, for powering through today's episode. I know that you're going to be getting some surgery, so we don't want to keep you too long today. We
That's okay.
We just wanted to get a grasp of what's going on in these markets, and heading into the weekend, heading into next week, I'm seeing some love today. The Nasdaq up 2.2, the SPOO's up 1.8. What are your thoughts? What are you looking at?
Again, this might give us some clarity as to whether we're in a longer term market. So we see the bargain buying today. If it actually extends and we get our bottom arrow, let me put my indicator on here that tells us. And actually, let me put the analog indicator, right? In order for us to get notice of a bottom, we would want to see this teal line go above this magenta line, right? So it's heading there, SIP. It's heading there. So if yesterday was our bottom and we get that confirmed by the teal over the magenta, then it'll be interesting to see how high we go up. If we go up about halfway, if we go up to about 5,800, 5,900, something like that, and then start heading down again, then I'm jumping all in on this being a recession, this being a down market. We'll start talking about downtrending, how to trade the trend down, how to do swing trades in the down direction, all of that. But for now, I'm not there. A lot of things have to happen. So I'll be watching. Number one, did we find a bottom yesterday? Number two, where's the next top going to be? Those are the two things that have to pan out before we start saying go from a defensive position to an offensive, let's short everything we see in sight.
Yeah, and if that happens, we'll have some strategies and some ideas on how you can approach that. Once again, access to all of AJ's amazing tools. The Trading Trader community is in that Quick Links page, the Quick Links page, which I just put in the chat. So head on over there, show some love, hit that follow, hit that like, hit that subscribe button. You've got the AJ's free indicator suite, where you've got the options lookup tool. You've got his daily workshop. You can learn a little bit more about coaching. All the goodies are on this links page. Head on over there and give it a whirl. Otherwise, heading into the weekend, positive vibes on a Friday, feeling good about that. Maybe we'll have a little bit of a less dramatic weekend. But once again, AJ, thank you for your time. Thank you for powering through. We hope you feel better.
Yeah, I'll post for all those people who have been sending me all sorts of, get wells and kudos, and mostly I'm getting what happened. I'll put something on our Facebook page that explains what's going on. I just hit my eye really hard, and we have to see if I can get vision back on Monday. I'm going to have some surgery to see if we can get the vision back in my eye. I'll tell you all about it on Facebook. So check out our profile, maybe comment what you think about that. But I'll put something this afternoon.
Awesome. And once again, thank you to all our lovely viewers and fans. We do appreciate you tuning in, appreciate you showing some love. We're seeing the numbers go up. So thank you for that. And our guests, not this week, but we've got some awesome guests lined up the next couple of weeks. So stay tuned, hit that subscribe button. And AJ, feel better. Everyone else, have a good weekend. We'll catch you guys next week.
Take care.
Thank you for tuning into the AJ Brown Show. If you're interested in learning more about AJ and his investing techniques, head on over to tradingtrainer.com and create your free account today. And if you're not already a subscriber to the show, hit that subscribe